Thanks for joining us on Bloomberg Quint. I'm Harsha Subramaniam.
Good afternoon. I'm Meera Dugal. This Tuesday afternoon, these are our headlines. Indian markets trade in a narrow range. Volatility remains low in expiry week.
The Indian rupee hits a 2-month high to trade above key moving averages.
The telecom regulator puts out its recommendations on net neutrality, says no service provider can discriminate on any content but exempts specialized services from the list.
UTI Asset Management Company sees more legs to the realty stocks rally, especially after the government's thrust on affordable housing. We'll get to all of that in a moment, but let's take a closer look at what's happening in the markets today. Neeraj is here with some details. Neeraj.
Yeah, so the headline said it all. Subdued day of trade, not moving at all, and the banks too are refusing to participate in the session today. Maybe call it a pre-expiry quietness that we're seeing today, but hardly any movement. And for every large cap gainer, and there are certain banking stocks that are moving up, there are equal and opposite losers. I thought that one pocket that stood out in trade was cement. So cement has made a bit of an up move today, large, mid, small. I think a clutch of names moving up out. So I saw Ultratech doing very, very well for itself. ACC down about 0.5%, but Ultratech doing very well. Dalmia Bharat was doing reasonably okay for itself. A couple of other names moved up in the session today as well. So cement is having a reasonably okay day. The market breadth, mind you, is not too bad. So the market breadth, in fact, has stayed positive for most of the last 3 days or 4 days. So while the markets may have been flattish, the market breadth has not really corrected in a big way, which is good. Volatility is not spiked in any fashion whatsoever, which is also not bad. So all of those parameters are fine. Just the fact that the index is lying very, very dormant and banks are lying very dormant. Almost all across the trading floors, and the experts who have come on the channel as well, I've spoken about an expiry at 10,500. Should the Nifty Bank give support? So I think that remains the key monitorable.
All right, Neeraj, thanks so much for that. That's the structure of the market. Let's go straight into the story that's coming in this afternoon. The Telecom Regulatory Authority of India has released its recommendations on net neutrality. The regulator has recommended that licensing terms should provide explicit restrictions on any sort of discrimination in internet access based on content being accessed, protocols being used, or user equipment being deployed. The recommendations go on to say that service providers should be restricted from entering into any arrangement, agreement, or contract by whatever name called with any person, natural or legal, that has the effect of discriminatory treatment. But there is, and as always, there is a but. Specialized services seem to have been exempt from these rulings. Samit Sarkar is joining us with greater detail on what's coming out from those recommendations. Samit.
So TRAI in its recommendations on net neutrality is restricting the service providers from entering into any agreement, arrangement or contract that has an effect of discriminatory treatment. Now the licensing terms should also has also been restricted from any sort of discrimination in internet access based on content. Now content definition would include all contents, applications, services and any other data, and discriminatory treatment would include any form of discrimination, restriction or interference. It also includes blocking, degrading, slowing down or granting preferential speeds or treatments. However, TRAI has kept specialized services and content delivery network out of the ambit of discriminatory services. Now these specialized services would be identified by the Department of Telecommunications and Content Delivery Networks, which means the service provider providing services on its own app are also exempted from the scope of discrimination and restriction.
Somit, thank you for that. Let's discuss this in a bit of detail. Nikhil Pawar, editor at Medianama, now joins us on the phone line. Nikhil, thanks so much for joining in. You've been an advocate of neutrality for a while now. And one of the basic premise of neutrality was to say that there will be no fast lane for anyone. Do these recommendations protect that premise?
Yes, absolutely. I think the recommendations are in line with those that were made in Feb 2016 under the differential pricing recommendations. So according to this recommendation, there will be no discrimination when it comes to speeds. So there will be no throttling, there will be no blocking, except in case of specialized services, which should not essentially replace something that's on the internet. So this is also something which we've seen in case of the last ruling, where a closed user group sort of a system was allowed, as long as it did not replace content or services on the internet. So the same principles that were there have been repeated here in a sense. And I think this is an excellent ruling from that perspective, because we were worried that, for example, the Internet of Things might be kept out of the ambit or maybe government services might be kept out of the ambit, but that's not happened. The TRAI has kept internet access neutral.
Nikhil, give us an example of what would qualify as specialized services. Is the definition narrow enough for it to not be misused?
So I think that's going to be a little tricky, but one of the things that I heard the TRAI chairman say was that in case of autonomous cars, for example, which is not an internet service which is being replicated, again, for that, the DOT would have to identify and create an exception specially for that type of service. And of course, they would have to then abide by the rule that it's not a replacement of something that's on the internet. So, one thing that is definitely not going to impact is video. So video providers cannot discriminate, or ISPs cannot speed up a store on video, won't be applicable to, let's say, VoIP calls. So, you won't find that, an operator is slowing down and reducing the quality of service for a WhatsApp call versus, let's say, an Airtel talk sort of a thing.
So if I understand this right, Nikhil, the idea of differential pricing is out of the table?
Sorry, I didn't get that.
Is the idea of differential pricing, is that completely out?
No. So the differential pricing one was done and dealt with in Feb. This is about speeding up and slowing down. So now differential speeds are also out.
Okay.
Okay, Nikhil, same question for the IoT part. Again, there they have made some classification of critical IoT services which may be left out. But again, you think that's fair enough? They'll be well defined by the regulator, and then you sort of stick to the principle, and within that, if required, provide exemptions.
Yeah, I think they wanted to give that option to the government for identifying critical IoT, and I totally understand that. My opinion is that there should be separate spectrum allocated for those services that do not connect to the internet or impact the open internet, and especially when you've got more spectrum being freed up, which is currently being experimented with for TV white space spectrum, right? So in some countries like France, for example, there are special spectrum bands for IoT, and I think that the government might want to consider auctioning that spectrum specifically for that purpose.
Nikhil, we'll leave it there. Thank you so much indeed for your quick sort of reactions to what's come out from the TRAI. These recommendations seem to be broadly in line with what the advocates of net neutrality were proposing. So that's good news for those guys. That's TRAI. From that, let's move on now to GST. GST collections have dropped significantly to about 83,346 crore in October. This is the lowest monthly revenue yet from the goods and services tax. Menaka is here to explain the possible reasons for the fall. What do you make of it?
Well, I don't have possible reasons for the fall, but the government in a statement released yesterday explained both the lower collection numbers and the lower filing numbers on these accounts. They said that IGST credit was being utilized for payment of SGST and CGST, so that's integrated GST for state GST and central GST, and therefore the inflow of new taxes is low. They said that they've lowered the GST rates, and therefore obviously the collections were lower. And they also said the delayed implementation of some of the main features of GST, such as matching of returns, e-way bill, reverse charge mechanism. On account of the delay of all of these, they've all been deferred, as you would remember. The collections have been lowered. Now, yes, these could be reasons for why the collections are lower, but that doesn't take away the concern that one may have on account of these lower collections. And let's not forget that the actually big cuts in rates came in the first part of November. That was with the GST Council meet on the 10th of November. So November numbers could likely be even lower than the October numbers. Now, that said, it's not clear what all of this is supposed to amount to. So we've had two brokerage reports since morning today, Credit Suisse and Kotak, both raising an eyebrow on account of the lower collections. So for instance, Kotak said that compliance remains low, is unlikely to increase significantly till the complete framework is implemented, and that the collections are well below the desired level of indirect tax collections. Credit Suisse also saying that these estimates or these collections have fallen short of our estimates. In fact, Credit Suisse saying something interesting, which in a sense is exactly how I was feeling yesterday when the data came out. They said there are too many missing data points for us to be able to conclude whether this is enough revenue or not enough revenue, right? And I think that's been the concern. Every month the information release differs. We have very little comparability. I'm not entirely blaming the government for this. I understand this is a huge architectural change in India's tax system. So therefore, this is an evolution And it will be only over the period of months that we will find out exactly what the outcome is. But at this point, as we stand, there is no way to be certain from a fisc point of view on what that revenue amounts to. I'll end by just quoting one line from the Kotak report, which I thought was relevant, and this is what they've said. They've said that there has been a significant amount of revenue slippage compared to the budgeted levels. Our calculations indicate that the government required a monthly run rate, this is inclusive of petroleum products, of around 750 billion from July 2017 to March 2018. We estimate that the average run rate has been between 500 billion to 550 billion, and that's much lower. So what we should have been doing a run rate of 700 billion according to Kotak, we are doing a run rate of 500 to 550 billion according to Kotak, and therefore that is much lower than what was anticipated. That said, the caveat always is that maybe as the system cleans itself up and more people converge to it, the numbers could jump exponentially, or they could not. There's no way of knowing, guys. But that's where we stand with the October numbers for GST.
All right, Menka, thanks so much for explaining that. That's GST and the various unanswered questions that the data released leaves us with. Moving on to the Bharat 22 ETF, it's had a strong listing on the bourses today. The idea behind the exchange-traded fund was to bring in retail investors. That's according to ICICI Prudential's Nimesh Shah, who manages the fund. In a conversation with Bloomberg Quint's Yatin Mota, he talks about the valuations and the selection criteria for the stocks. Hear him out.
When we had gone about selecting the companies in the index, each of the companies we had said what is the scope of this company over the next 3 to 5 years. Right? Government of India is doing, since private sector capex is not happening, Government of India is capex is quite active. Another point that is there in the market is that a lot of amount is being spent on infrastructure. Right. So we have gone about that with this government initiatives, which are the companies that are going to benefit. Also, as you have seen that the management of these companies is also being done, they are trying to beef up the management of these companies also. Okay. With all these efficiencies will come in cost, there will be better revenues for these companies. That's what we expect. So we have gone about that, and that will result in a better EPS over the next 3 to 5 years. Okay. Whatever the government is doing today will benefit not only in the 17-18, will benefit 18-19, will benefit 19-20. So I think there is and with the earning per share increasing and the market getting convinced that these companies are being managed better, are being managed much better, there is a good chance of these companies getting re-rated on the PE side also. Okay. So what we have in mind when we wanted retail to invest was not this that on listing you'll get 3-4% more. Okay. That was not the only idea. That was one sweetener that the government of India has put in. But frankly, somebody should invest in this ETF now if they are convinced of what the things that I said, that the government of India is serious about these companies and wants to manage these companies better than they were been managed in the past. And we have seen the early signs. The last 3 years we have been seeing it that they have been managed better. So if you believe in that thing and if you believe that this revenues and the cost can come down and the revenues can go up, then both EPS expansion and PE expansions in these companies are possible. That's what we believe as ICICI Prudential.
And if you look at the design, of course, you said that the companies will be managed better, and we have most of them very large companies amongst the PSU stocks. So do you think return-wise on the benchmark indices, these kind of funds can outperform moving forward, given the fact that we have a healthy mix of strong PSU companies in the basket?
See, that's what the whole structure was. That when we had created the index, that was the government of India idea was also that because they wanted to attract retail investors. See, if the government wanted to divest, it could have always done an institutional issue, and foreign institutional investors or the institutional investors would have invested in it. Their whole idea was to get the common man of India in. Right, so they were very conscious that they come at the right price and companies with good future.
Okay, and one final question on the expense ratio, really, because as an investor, one is worried that how will the expense ratio shape up. How will the performance of the fund shape up? Because again, everything is a function of returns for the investor. So in terms of the expense ratio and in terms of management fee, how does a company like ICICI Pru AMC look at this product? And if you could share some numbers with us.
So investors should be very happy because this is one of the lowest expense ratio possible. Right, there is nothing in it. As far as the retail investor is concerned, it's a good bet for the retail investor because he's not getting hardly there is any expense on that. Very, very negligible, less than a basis point.
That's on the Bharat 22 ETF. Let's move on and talk about real estate. Real estate stocks have beaten every industry group in India this year, drawing criticism from some analysts who say that the gains are overdone. But V. Srivatsa, a fund manager at the UTI Asset Management Company that manages about $23 billion in assets, says there's more juice left in these stocks. Nupur Acharya of Bloomberg News now joins us with some of those highlights of the interview. Nupur, we've seen these stocks rally. We talk about it every single day about how these real estate stocks have rallied significantly. So he believes, UTI believes, that there is more juice left. Why?
So it is important to understand, Harsha, here is that in a market like India where valuations are surging, a fund manager has this Herculean task to find value. But UTI Mutual Fund's optimism about this sector is based on some very critical observation. The first thing is the whole big push towards affordable housing. And we had that CLS report coming out which said that affordable housing is that one straightforward bull story in the Asian equities. And you cannot disagree, given that the government plans to build 50 million houses by 2022. That's a lot of projects. And again, then you have interest rate waivers, you have incentives to build low-cost housing, and not to forget that the whole real estate regulator and the clampdown on black money. So all of this put together tilts the balance towards organized players, and that will help also increase customer demand going forward, is the big bet for UTI Mutual Fund.
All right, Nupur, thanks so much for that. That's real estate and whether real estate stocks can outdo at a time when the real estate sector is perhaps not in the best of health. Speaking of sectors or segments which are not in the best of health, the stressed asset problem continues to draw divergent views. Rashesh Shah, who heads Edelweiss, which has Edelweiss ARC, they are the largest ARC in the country, has written a piece for Bloomberg Quint, and you can go to bloombergquint.com to read it. But I just want to highlight a couple of key comments made by Rashesh Shah in that particular piece. He talks about the fact that the changes made in the ordinance are far-reaching, and just like with all other far-reaching changes, there are some issues in the short term. The primary concern that has been voiced is around the pricing of stressed assets, which might see a fall as promoters are barred from entering the process. However, Rashesh Shah writes, the bottom line is that in most of these cases, as it is, the promoters were struggling to put together a credible, tangible resolution plan with sizable bids. So he thinks that the pricing impact of this insolvency amendment would be minimal. He goes on to talk about the fact that the problem is not in the large assets which are being resolved immediately under IBC, but perhaps may emerge for the smaller assets. He says that most large and good quality assets will have several genuine buyers coming in, and efficient price discovery should not be a challenge at all, if he can bring up that quote. He then says that, in fact, if anything, this could further open up the gates for private equity investors as well. Pricing, however, could be a concern for smaller company, writes Rashesh Shah, which may not get alternate buyers. Very interesting comments. Go to the website to read more on it.
All right, more on that. Insolvency and bankruptcy ordinance will add value to the proceeding if we follow realistic timelines. That's so says Renuka Ramnath, founder, managing director and CEO at multiple alternate asset management. But he's not ready to invest in a stressed asset yet. In a conversation this morning, she says, although the AMC has been evaluating a number of stressed assets, no acquisitions are in the pipeline in the near future.
Stress asset is a very important space for multiples. I've taken a call on investing in a team. So we have Mr. Bhatia, who has been with us along with two other colleagues for over a year now, looking at this opportunity. It is still very, very early. I mean, if one were to look at it from an academic perspective, what is the amount of NPA that is there? And can we bring external capital? What are the provisions in the bankruptcy code? Do you have confidence that, you can put money? The answer to all of these questions is yes. But as all of us know that from a legislation to reality, it's a journey, because banks have to understand how to do this in a manner that they protect their interests the most, because for them, highest recovery is the main goal. Other creditors just getting their money and running away from the company is their goal. As far as private equity investors like us are concerned, value. What is the value at which you are entering? What is the value that you can create? And therefore, what is a share of that overall value that you should be allowed to keep, and how much you need to share with the banks is an issue. So I would say that the whole system will take a few years to come to equilibrium. The good news is that we are taking a lot of right measures. And then you put these laws and practices into the market, and the market will give it shape in terms of how do you become practical, that you deliver these different value system to various stakeholders. So it holds a lot of promise, but we should not be too ambitious on the timeline and then say that, oh my God, nothing really happened. This is yet another disappointment. I think if we are realistic about time frame, it will help the banks in a big way, and it will allow for private equity investors. See, one big point I want to make is, for creating value, the most important thing is human capital. Only people create value. Technologies don't create value, markets don't create value. You need a human to stand behind that and create value. Historically, I used to find it impossible to attract talent into private equity invested companies, because the whole notion is you have come in, you will go out, and what happens to me? As a professional, I would much rather work for an MNC or a well-established business house. Today, there is a flood of talent coming into private equity and privately owned assets because of the openness that private equity investors have of sharing the wealth with the professionals, and a deep desire in a large proportion of professionals to play an entrepreneurial role. You know, take the risk of turning around a business or growing a business and sharing in that wealth creation. That's a very, very big positive, and we can harness that, combined with specialized agencies like Alvarez and Marsal or many other consultancy firms.
To turn around assets.
And long-term patient third-party capital like the ones that we provide. The stage is very, very well set, but we have to give it time and be patient in working with all the stakeholders.
All right, that's Renuka Ramnath speaking about the stressed asset space. We'll slip into a quick break. We'll come back. There's a lot more on the show. SoftBank looks to buy stake in Uber at lower valuations. We'll tell you about that.
Are we live?
Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
More than just business news, we're news for business people.
Back on lunch, let's take a look at the headlines at this hour. Markets clock in minor losses, mid-cap index hits a fresh high.
Investors led by SoftBank show interest in buying stake in Uber, but at a 30% valuation, lower than current valuations.
Flipkart regains its position as the most trusted e-commerce brand in India, but Amazon offers a better overall experience, shows a survey.
And Ivanka Trump arrives in Hyderabad to participate in the Global Entrepreneurship Summit being hosted in India for the first time.
All right, let's take a quick check at how stocks are faring right now. Pradeep is here with some of those movers and shakers. Pradeep, some action in mid-caps now?
Definitely. If you look at the broader indices, actually, yesterday and again today, they have remained range-bound, some recovery from lower levels, but getting stuck at higher levels once again. So all eyes on expiry. Can we close decisively above 10,400, closer to the recent, or rather the highs of 10,450. So that is a resistance, and as you get closer to that, some kind of unwinding starts. But mid-caps definitely remain in focus on the back of encouraging brokerage reports or some news developments. You can see several stocks actually doing well. If you look at some of the broader themes in today's trade, the tea stocks continue to buzz, and also, in fact, the tea packaging company like Tata Global, but you also have focus on Godrej Consumer. So the FMCG segment is kind of doing well in today's trade. You have some of the smaller names like Talbros Auto rising today. You have a VIP doing well on the back of some development or a report once again. So as you look at the mid and small cap, you'll find more gainers than losers. Market breadth also has remained strong, and even if you look at the kind of capitalization of market breadth, that looks even better, which means if you look at the mid-cap gainers, you'll find better volume than the companies which are, or the stocks which are not doing that well. So I think the indices are kind of deceiving, and they may continue to remain in a range for next 2 days. That is what most of the FNO traders believe. The expiry could be around current levels, plus minus 50, and focus will remain stock specific on mid and small cap.
Pradeep, thank you for that. Well, double-digit earnings growth along with 5 to 7% correction in prices would set the stage for 2018. That's about coming from Nilesh Shah, Managing Director and CEO at Envision Capital, in a conversation earlier today with Bloomberg Quint. He says the investment opportunities in cyclicals like engineering, infrastructure, cement and housing. Listen in.
This 5-7% correction, if it were to happen, I think it would kind of be a bit healthy. I think that would set the stage for, again, a decent up move in 2018 as well.
You would presume valuations demand this correction as well?
One is valuations, and I think it will leave some cushion. So, for example, we are pretty optimistic on earnings growth going forward. Earnings growth have been, in a way, elusive to Indian equities. I mean, we've seen earnings growth of between 5 to 8% for many, many years. It's been a single-digit earnings growth era, so to say. But we believe that with the start of 2018, we believe earnings growth will get into double digits. It may not be the high teens, but it could still be the low teens, or the lower end of double digit kind of earnings growth. So we believe that's the probability of that is very, very high. And I think if that, along with a bit of a correction in the marketplace, I think could set the stage for 2018 again to be a fantastic year for equities. We still believe that sectors to do connected with infrastructure, so sectors like engineering, cement, these are going to be the big opportunities. I don't think we can remain growing at 6% at the GDP level for too long. India will get onto a path of 7 to 8% growth rate. If that happens, we believe core sectors will do well. We believe areas like public investment in infrastructure, private capex, housing, these are some of the sectors which we believe will start picking up in a significant manner going forward. And if that were to be the case, then a lot of subsectors like cement, some of the fast-moving industrial consumables, these are some of the areas which will start to do well. Apart from that, of course, engineering and services will also do relatively well. So we think some of these kind of sectors will do reasonably well.
All right, that's the equity market. Meanwhile, in the currency markets, the rupee has strengthened. It's trading at about a 2-month high. That's the Indian currency for you, 64.43 against the US dollar as we speak. Let's get a view in on the Indian rupee. Anand Bagri, domestic market head at RBL Bank, joining us on the phone line. Anand, good afternoon. Thanks for taking our call. I just want to understand what's been happening in the currency markets last few days. Looks like the rupee is benefiting from flows, or is it more than that?
I think it's more than the flows. I think it was basically a technical correction which was long overdue. If you remember, when we last spoke in the first week of November, we were somewhere around 65.20, 25, and we were expecting rupee to move up to 65.50 and then maybe rebound from there. So it's just a technical correction. We have actually not seen much of flows which have come into the market. Actually, we expect rupee to possibly stem at these levels at around 64.35, 64.40. We expect some oil demand to come in at these levels, and possibly rupee should rebound. I think what is also helped the rupee in strengthening is the dollar index, which has basically reversed from around 95 to around 92, 92.50 types. So I think that is the major reason. Apart from that, there has actually not been any fundamental change in the view. It's just a technical correction which was due for some time.
I was just going to ask you the performance of the dollar as well, Anand. Is that sort of weighing on the rupee as well? The way the dollar has moved against most other currencies.
Yeah, basically after the FOMC, after the Fed meeting, I think more or less people are not too sure about the rate hike trajectory. I think Fed has also indicated that they would be possibly looking at more inflation and more credible data to basically look at hiking rates. So I think that has also been weighing down on the dollar performance, and that has to do with all the major currencies against the dollar.
Anand, there were a couple of theories. One, of course, was that, post the rating upgrade, at least from one agency, you'll see some flows come into the equity side. Actually, November has been a pretty decent year for equity flows. On the debt side, we were negative mid-month, but now we've turned positive. So is that a factor of the fact that yields are higher? Can you give us a sense of what the flow situation is looking like?
Yeah, I think the next, if the FI flows would start coming in from January onwards, because obviously the interest rate differential is too huge to be ignored. So, but I think the FI limit is currently full on the debt side. So I think the money would start coming in from January onwards. For the month of December, we expect to remain range bound, and possibly January, based on the flows, we could see some strengthening in rupee.
Okay, so if I understand you right, you're saying in the next couple of months, the rupee is going to trade at these levels and perhaps weaken from after January.
After January, yeah.
What kind of levels are we talking about?
We'll have to basically look at the debt flows, which should happen from the month of January, because as of now the FI limits are currently full on the debt side. So we'll have to look at the flows in the month of January.
It's been a decent, if we close around even these levels, Anand, it's been a decent year for the Indian currency.
That's true.
Okay, and would you expect further strengthening in 2018, assuming that there is no sort of change in market or macro conditions?
My sense is rupees should possibly, there's an important resistance at around 64.20, 64.40 at these levels only. So I don't think rupee should further strengthen from these levels. But I think RBI would also not be comfortable given the export performance of the export-oriented units. So in my sense, I think rupee possibly it should not breach 64 levels on the downside, and possibly should trade from 64 to 66 levels for the next few months.
Okay, 64 to 66. Anand Bagri, thank you so much for joining us with your views. That's the view on the currency. That's trading at about 64 levels. No major triggers for the rest of the calendar year, he says, but watch out for flows. All right, as more economists publish their outlooks for 2018, those from Goldman Sachs and Barclays are proving to be the most bullish. The two brokerage houses are forecasting as good as it gets, global growth of 4% next year. What's the rationale behind the forecast? Bloomberg's Malcolm Scott joins us from our studios in Hong Kong. Malcolm, thank you so much for joining in. Take us through what the major central banks are saying as far as forecast for 2018 is concerned first.
He's on air. No, he can't.
Malcolm, if you can hear me, I was asking you what are major banks are saying about forecasts for 2018?
Well, we're hearing growth of up to 4% from people like Goldman Sachs and Barclays. That's a global environment where really the good environment we've seen this year continues on to next year. And it becomes somewhat virtuous because the good growth we've seen in parts of the developing world has spread and reflation has spread. And so we're seeing now more growth in the developed world. That's been the theme of this year. And then that flows back to commodity prices, back to the emerging markets, and we see this virtuous circle. And that can probably continue for a little while because inflation isn't getting in the way so far.
I was just going to come to that. In these forecasts, is it the predominant theme that inflation is likely to be steady in 2018?
That's right. Most of the big investment banks globally see that there's no real inflation pressure yet. That means the Fed can stay rather benign with maybe 2, maybe 3, maybe 4, according to Goldman, rate increases next year, but still nothing to derail the global growth recovery. That means we're going to see this sort of flattish yield curve continue if you bake in those estimates. So the risks start to come in to if there's any deviation from that view, if this global demand picture really heats up and starts to flow through to wages and inflation, but still there's very little sign of that.
So are there any apparent risks at all being mentioned in any of those forecasts at this juncture?
Well, mainly for the second half. The first half, it seems, is a real global growth momentum story. I'm pulling out the sort of common threads here of the major research notes. Most of them see a fairly benign environment, a fairly supportive environment. Some of the risks that have been pinpointed, though, stem around the second half, perhaps, if we do see some pickup in inflation and the Fed has to tighten a little bit more aggressively. That could, of course, be somewhat of a break, especially in emerging markets that rely on imported capital. The other thing that is often a worry is the huge size of financial markets these days. Ruchir Sharma at Morgan Stanley pointed this out a while back, that the total value of bond markets, stock markets, all of that thrown together in the world is about $250 trillion these days. That's about 2.5 times the size of the real economy. Now, 20 years or so ago, it was about a 1-to-1 ratio. So that, of course, means the big threat this time around, so maybe it happens next year, maybe not, let's hope not, but maybe, is that we get some sort of problem in financial markets, and that problem becomes so severe that that hurts the real economy. But these are really just risks at this stage. Most of the underlying dynamics look pretty good. We've got good demand, trade is flowing pretty nicely, commodity prices are holding up at a reasonable level. So at this stage, you know, it's a bit of a sweet spot for the world economy.
Malcolm Scott, many thanks indeed for joining us with your views. That's Malcolm Scott joining us from Bloomberg News in Hong Kong.
All right, bringing the conversation back home, GAIL India is stuck in a peculiar situation. Russia's Gazprom has said that it will start delivering liquefied natural gas to India, but the Indian gas supplier doesn't want the gas, at least not before it has renegotiated the terms of the contract with Gazprom. Bloomberg News' Debjit Chakrabarti joining us with the details. Debjit, what exactly is going on? Why is GAIL not willing to take delivery?
As you know, I mean, even as GAIL was engaged with Gazprom to rework or renegotiate a long-term LNG deal, Gazprom has recently sent a letter to GAIL saying that it's preparing to start deliveries from April. So this is very important in the context that 2 other long-term LNG supplies from the US will commence next year. And there is a problem of plenty for GAIL to find customers in the country, which is very, very sensitive to natural gas prices. So yeah, I mean, GAIL was trying to push it back or rework the prices, but this letter of confirmation saying that the supplies will begin from April is a real setback for GAIL.
Interesting that, Debjit. Thank you so much indeed for joining us. That's a story from GAIL. Let's talk about pharma now. Glenmark Pharma has slipped in trade today after receiving Form 483 for its Buddy unit in, although it contributes only 10% of revenue for the company. Darshan is standing by to tell us why this is significant. Darshan, you know, these are observations at this juncture. Does it matter materially for the company?
Yeah, it does, because, you know, 7 observations is a little too much for a company which does not have too many regulatory issues over the past few years. So 7 observations, and the inspection was done very recently, from 6th to 11th of this month. However, you know, despite the fact that it's only 10% of the sale, some of them do seem a little serious in nature. Now, if looking at the first observation, that talks about out of specification issues, and that is actually not very, very important. The next one talks about written procedures, which is also procedural in nature. The third one talks about records not being filed. Now, the fourth one, 4th, 5th, and 6th are slightly serious in terms of the records not maintained. So data can be reviewed. That is something that the US FDA will take cognizant. So data is not something that is protected here. The fifth observation also talks about quality control. Responsibilities and procedures for quality control are not followed. And the sixth one talks about appropriate controls are not exercised to a computer. So, even a person in a warehouse could access the quality control computers. So that was something that the US FDA will not take lightly. A couple of reactions that have come out. Edelweiss has come out with a report indicating that they don't believe that this is, there's any kind of data integrity issue, and they believe that the chances of escalation are low. But still, this gives an indication that, Glenmark will have to get these 7 observations cleared before they start getting in new approvals. On that way, sentimentally, yes, this is a negative for Glenmark.
All right, Darshan, thanks so much for that. SoftBank, along with a group of investors, is set to be bidding for a large stake in Uber Technologies at a sizable discount to the ride-hailing company's $69 billion valuation, a 30% discount if word is to be believed. If the deal does go through, it will be one of the largest ever in a private company. Bloomberg News sends us this report on whether this deal will go through and what's being reported so far.
Well, it tells us that Uber has had a very challenging year, and SoftBank, along with a couple of other investors who are putting in money, see an opportunity to get in at a price much lower than the last round of fundraising. Remember, SoftBank and the other investors are putting in $1 billion at the $69 billion valuation that you mentioned, but now they're offering this tender for shares from existing investors, and they're beginning about 30% below the previous price. They're putting this offer out there, and they've said that they want to get a substantial stake in the company, at least 14% of the shares. They're supposed to get 2 board seats as part of this transaction also, and they need to see now whether investors are going to take this kind of substantial discount.
All right, let's move on now. The battle for #1 position in the Indian e-commerce market is neck and neck, but Flipkart seems to have inched ahead in terms of customer trust. That's according to the latest Redseer E-tailing Leadership Index. Amazon, however, provides the greatest customer experience, it seems. Nishant Sharma is standing by with details of this report. Nishant.
Right, Harsha. So according to a survey by Redseer Consulting for the quarter July to September, Flipkart has taken a lead over Amazon in terms of brand recall and popularity. Now, this lead is primarily driven by Flipkart's better presence in Tier 1 and Tier 2 markets. Now, however, when it comes to metros, both Amazon and Flipkart have emerged as a combined winners as far as brand recall and popularity is concerned. However, there's one metric where Amazon, as you rightly said, has taken not lead over Flipkart, not for this quarter, but for a consecutive quarter. That is user experience, which is primarily led to because of Amazon's Prime subscription, an annual subscription that bundles Amazon offering under one roof. Now, if you look at the overall score, both Flipkart and Amazon has emerged as a combined winners for Redseer's Leadership Index. However, they saw a slight decline in the overall score. Now, for this quarter, while the combined score for Flipkart and Amazon was about 92, but for the quarter July to September, for the quarter July to September, it was 95. Now, for the survey, Amazon, Redseer surveyed about 7,500 online shoppers about 30 cities and looked into about 30 different kinds of parameters before arriving at the results. Now, the report also says that while Amazon has a clear advantage in metros, when it comes to Tier 2 and Tier 3 towns, it's actually Flipkart which has a clear dominance against Amazon, and that is also actually working well in the favor of Amazon. It's giving working in favor of Flipkart. It's giving a tough competition to Amazon. It's also helping Flipkart to widen its reach in India.
Nishant, thanks so much for that. That's the Flipkart-Amazon battle, or one part of it at least. Let's move away and move across to Hyderabad. The city is playing host to Donald Trump's daughter, Ivanka Trump, also his special advisor. She's leading the U.S. delegation at the Global Entrepreneurship Summit. This is the first time India is hosting that summit. And Ivanka is just one of the personalities who will be there at that summit. A whole host of Indian leaders, Indian entrepreneurs will be there. Bloomberg Queen's Tamanna Anamdar is also there. She's joining us here on Power Lunch. Tamanna, first, what's going on there? Big buzzy day, lots of people, lots of excitement, lots of sort of fanfare around it.
Absolutely, It's a completely exciting situation over here because, we're heading into the countdown. 4:30 is when the opening plenary session of the Global Entrepreneurship Summit 2017 begins, and it's kicked off by Prime Minister Modi, followed by, a speech by the Telangana Chief Minister KCR, and then of course Ivanka Trump comes in and speaks in. But before that, we have a host of delegates here from all across the world. I've had a chance to meet some very interesting people, talk about what they hope from GES and to showcase it as a platform. Of course, the really innovative part about this year, as I've been saying since this morning, is the focus on women and how prosperity for women means improvement for the communities as a whole. So I'm getting an opportunity to meet a lot of people talking about that aspect of entrepreneurship, and hopefully some interesting stories coming your way.
With a few innovators, take us through what kind of stories you've heard, what's the sense you're getting on the ground?
Yeah, absolutely. So I've spoken to a few people, and before I tell you about that, Harsha, just to add one more thing about the scale of this event. Of course, it is entrepreneurs to meet each other, etc. But it is also a huge diplomatic push between India and the United States. Ivanka Trump was invited by Prime Minister Modi on his visit to the United States in June this year, and it is on his invitation that she is leading this delegation. You have Nirmala Sitharaman, Sushma Swaraj, Suresh Prabhu, so 3 cabinet ministers who are going to be hosting and participating in various sessions through the day. So it is a big part of that push as well. But at the end of the day, it's about the people and the ideas they bring to the fore. So I've had an opportunity to meet a few interesting people, right from a 13-year-old innovator who wants to make an app so that people know more about autism, to a doctor who's created the AmbuPod for rural areas so that they have ambulance services at a much cheaper cost. Listen in.
With this healthcare platform basically provides 24/7 ambulance services, number one. Number two, daily clinics in the morning. You can walk in there and see a doctor and get your treatment and medicines. And it's also what is called a telemedicine center. That means you can connect with doctors far off. And best of all, the costs are almost 1/5 to as less as 1/10 the cost that you would pay in the cities.
So explain the cost difference and what is its USP?
The USP is that it's a narrow track vehicle. That means it can go down very narrow tracks in villages or in cities, for example. In Delhi, you get stuck in traffic. I've had patients who died in the ambulance because they couldn't get through. That would not happen because you can take this and actually drive into small pathways or go onto, if necessary, the side or the pavement and reach the hospital quickly. Plus, we must remember that this is a full ambulance. It's a micro ambulance, but it takes one patient and it can provide to you all the necessities for taking care of the patient. For example, you can give the patient oxygen, you can do suction, you can provide the resuscitation that is required, you can do an ECG, everything is available. As you can see the equipment out here.
This is the world's first hybrid manufacturing machine. So it's capable of both subtractive manufacturing and 3D printing as well. But 3D printing in a new manner, which is happening on 5 different axes. And we are the first Indian company to have won the CES Best of Innovation Awards just for this machine. So the applications of this can be in the wearable electronics market, the aviation sector, the aerospace industry, the automobile industry, the medical industry.
So this is a 3D printer?
It is a 5D printer is what we have called it, and that's also by the name of which we filed our patents, because the regular 3D printers operate only on 3 axes, and that restricts a lot of capabilities of the machine. Whereas this machine does not restrict any designer's thought flow on what he wants to make or how he wants to make it.
I have 5 apps. 4 of those are about litter and the harms it does to the oceans and environment. And the other one is about autism and strategies to deal with it.
So why the focus on autism?
Well, mainly because 1% of the world has autism. I have autism, my dad has autism. And people with autism are usually mistreated because not that many people are aware of autism. So I'm trying to get that awareness out and close that gap of treating people with autism like monsters. My plans with my apps is I'm currently working on a virtual reality game, and it's about crossing the road simulator, because people that have autism struggle crossing the road, and kids in general have a hard time crossing the road, since transportation is the leading injury in children. And I'm trying to...
So those were just some of the stories that I came across here at GES, and admittedly none of those three were women entrepreneurs, but there are a host of very interesting women entrepreneurs here from across the world, and those stories are going to be reaching you very soon.
All right, Tamanna, fascinating stuff. That little kid was just absolutely fabulous. All right, I think Tamanna is going to be reporting through the day from the GES, and you can catch all that on BloombergQuint.com.
Out of time on the show. Thank you so much for watching. Countdown is up next.